Tesla, Tesla, Tesla. What the fuck is going on with Tesla? Welcome back to the channel, everyone. I'm Jay, and today I want to talk to you about Tesla stock, Elon Musk, and the future of the company and the stock moving forward. The recent earnings came out, and a lot of Tesla investors are not happy. The stock is well over 10% down after the recent earnings report, and there are some concerns. But this is a great company. Let's figure out what we should be concerned about, what we should look at going forward, and how we can determine when to get in if we want to and when to sell if we think it's time to sell. All right, guys, stay tuned for the video. There are two things I want to go over. There's a great article by Forbes talking about has Tesla stock peaked? And then Meet Kevin went on Yahoo Finance and had an interview where he talks about how disappointing Elon Musk was in the most recent earnings call and whether or not he likes the company going forward. All right, let's get into it. All right, everybody, let's get into this article. Why Tesla stock may have passed its peak by senior contributor Peter Cohen. Tesla stock has fallen 46% from its peak price of $407 a share in November of 2021. Here's why I think the shares might fall farther. Failure to deliver expected revenue and earnings results. Okay, so we are in a high interest rate environment, and a company that sells cars are going to be directly affected by this. Tesla can lower the price of the cars as much as they want, but people can't really stomach 7-8% on a car loan, especially over 4, 5, 6 years. Trouble with Cybertruck's model. I tend to agree with this. I don't think Cybertruck is going to be necessarily as successful as some people think. I just don't see people in Montana and Colorado, the real fruit of American labor force, buying Cybertruck and bringing stuff out to their fields, having to worry about, range with their batteries just out in the fields all day. I just don't know. I just don't see it. I think we're going to have an initial big buying period of the Cybertruck when it first comes out, maybe the first year, year and a half, 2 years. But after that, it's going to be like the Hummer to me. The fad is going to end, and those Cybertruck sales are going to be lower, lower, and lower. And then he talks about fear of betting on lower cost cars. Price cuts failed to boost sales. False hopes for a surge in self-driving cars. Tesla expressed concerns about cutting its costs low enough to make its vehicles affordable. I'm worried about the high interest rate environment we're in, Tesla CEO said in the earnings call, according to CNBC. If interest rates remain high or they go even higher, it's that much harder for people to buy a car, which is very true. I just can't emphasize enough how important cost is. We have to make our products more affordable so people can buy it, Musk concluded. This is very true, right? So in the earnings report, we saw that they didn't meet on EPS and revenue expectations, but one positive was that the other side of their business, the energy business, is booming. It's even more profitable than I think Tesla's margins are in that 15 to 16% range right now. And the energy part of that business is being very, very successful. And I think that people are underestimating how valuable this is. So the more Tesla cars that are on the road, they're going to be in this Tesla charging infrastructure. And as Tesla builds out the charging stations all over the country, they're continuing. It's just more money and more money and more money. It's going to be like a snowball effect. And a lot of other companies that are making EVs are making them adaptable to the current Tesla charging station. The amount of money they can make with the charging stations and their energy business is far going to supersede the margins and the revenue for the amount of car sales they're going to make. Man, once these infrastructures are built all over the world, these Tesla charging stations are going to make so much money, it's not even going to be funny. Let's go back to the article. Failure to deliver expected results. Tesla's third quarter report fell short of expectations on many dimensions, including the following. Revenue, $23.4 billion versus $24.1 billion. Are you really bitching about $500 million when this company's revenue is $23 billion? I mean, it's like 20x in the last 10 years, which is absolutely insane. So this article, they're nitpicking a little bit, man. They're trying to find holes where they don't really exist. Earnings per share also missed 66 cents versus 73 cents per share. And Q3 deliveries of 435,000 cars, a figure well below expectations and down 6% versus Q2, according to Investor Business Daily. I mean, when we're in this environment, every business is getting constrained. It's not just Tesla. These legacy automakers, they're going to feel it too. Everyone is in this car industry is feeling margin constraint and overall volume constraint with this high interest rate environment. Powell came out and said that they're probably not going to be raising rates anymore. So hopefully that stays true, and over the next 12 to 24 months we can get back in that comfortable 2.5 to 3.5% interest rate environment. There's also been another price cut on the Model 3, $1,250. It's down to $38,990 for the model, and then the price cut on the Model Y long range down $2,000 to $48,490. Then he gets into gross margin of 17.9%, 0.3 percentage points lower than analyst consensus. Come on, guys. Are you really bitching and complaining about 0.3%? The margins are great. 17.9% blows all of their legacy automakers out of the water. The most recent earnings report for Tesla were disappointing. They did miss on revenue. They did miss on EPS. But this is more of a macro environment type of situation than it is like an underlying issue with Tesla, the company. I think Tesla's going to be fine. They're going to continue to sell a shit ton of cars, especially with these high gas prices, and that energy business is only going to get better and better. The one thing that does concern me is CEO Elon Musk. He's got a ton of issues, and his attitude in the earnings call left a lot to be desired. He was pouting. He was kind of bitching and complaining. Hey, dude, put your man pants on and figure it out. There's going to be a couple tough quarters ahead. I don't want to hear you complaining. You're like the richest dude in the world. Just grow up. And him on Twitter lately, I don't know, man. His attitude has definitely changed over the last couple of years, and it's not for the better. He's got legal issues. He's got custody issues. Elon Musk is spread too thin between Tesla and Twitter and the legal battles and the custody battles and his own personal issues. I mean, this dude is spread way too thin. He needs to kind of rein it in and focus on Tesla. That is the most important part of his business model, right? I mean, all these other things are great, but if you're a Tesla shareholder, you want to see Elon Musk kind of refocus his energy back to Tesla and not go in all these different places. For me, if I see Elon Musk continue to say crazy shit on Twitter and kind of lose focus on what's really important in growing the Tesla business, then I'm going to kind of sell some of my Tesla shares. But if he kind of refocuses his energy, I can get down with Tesla because I like them as a company, right? But you need to stop talking about Twitter or X or whatever the fuck he wants to call it these days. He needs to grow up, dude, and stop bitching and complaining and whining and just run his business effectively. If you concentrated your energy more on Tesla, you could probably figure things out as opposed to being on X every 5 minutes and posting. And I don't want to hear you tweeting. Just focus on Tesla, man. All right, now I want to talk about Meet Kevin's most recent interview on Yahoo Finance. He points out a lot of things that I think a lot of Tesla shareholders are concerned about, and he was recently blocked by Elon Musk on Twitter, so I definitely think he hit a nerve with Elon Musk. Let's check it out.
What were your big takeaways from this?
Oh my gosh, this was terrible. I feel bad for him. Look, he's got a lot of things going on, legal battles, custody battles for his kids now, but it doesn't justify acting like Trump on Twitter, stonewalling the SEC or the European Union, and quite frankly, turning into a little baby on the earnings call. I mean, he was almost in tears. It showed a complete lack of leadership. Tesla's a leadership company right now, and it's terrible. That's why their CFO just left, I believe, as well. And this is a slap in the face to everyone. It's not just the shareholders, but it's a slap in the face to the other managers who are still there and the over 100,000 employees at Tesla. For a leader to cry about the economy rather than funneling that and coming up with a plan is pathetic. See, he's slow walking his plans to build the Mexico Gigafactory because he's worried about the economy. He's afraid, but he should channel that. And he should instead negotiate with the Mexican government, provide a clear formula. Rates go up, prices come down. It's not that hard. But Tesla still has industry-leading margins, over 16.3% going to gross profit. Out of every $100 they make, $16.30 go into gross profit, beating every other American EV manufacturer and even legacy auto manufacturer. They have so much going for them, but they should provide a clear formula. They should advertise to higher income areas, and they should provide a clear path for margin expectations. We got none of that. We got a leaderless Elon Musk who was afraid to be on an earnings call, who sounded beat down and like somebody who's basically leading Tesla into a directionless path forward. It's disgusting.
Well, Kevin, regardless of how you interpret Elon Musk's comments, we are seeing that reverberate throughout the EV sector. You look at where shares are among Tesla's competitors, all down, partly because of what we heard from Elon Musk saying that higher rates are sapping demand. Is that the whole story here?
Well, yeah. I mean, look, it's obvious that when rates go up, car prices become less affordable. It's the same thing for home prices. There are less buyers. Now, when it comes to homes, there are also less sellers, so you have a little less fluctuation. But in vehicles, everybody's producing more. So of course this is normal. But Tesla should be playing its strengths here. Tesla's strengths are out of everyone who's in this hard economy. Tesla is still generating massive profit per vehicle, massive free cash flow. The only pure play EV in America to actually be generating this cash flow. There's so much potential. They're so close on autonomy. They're so close on a revolutionary new vehicle, the Cybertruck, which is an exoskeleton rather than an internal skeleton for a vehicle. These are great products, and the people at Tesla should be cheered for this. But we need to know the lights at the end of the tunnel rather than hearing a complaining CEO who's not actually providing that path. This makes people nervous and scared. It makes people want to quit
Kevin,
Tesla
if we
and
look
not
at
be part of that.
If we look at the sector as a whole, though, I mean, the declines we're seeing today, not in Tesla, but in the names like Rivian, Lucid, I mean, they all have their individual stories. But is that warranted when you consider the higher rates may be sapping demand right now? But I guess the question to you is, does that long-term play for EV demand, does that remain intact still?
Oh, absolutely. 100%. Look, like long-term, 5-10 years down the road, everybody's going to want an electric vehicle. The range won't be an issue. There'll be charging stations everywhere. You'll be able to charge faster. Then you can fill up your tank of gas. These cars are much safer. They're much less likely to catch fire. They're much less likely to roll over. You don't have fuel in the back of your car in the gas tank. These vehicles are phenomenal. The acceleration's better. The handling's better. Everything about electric vehicles is better. Problem is, you have, Elon acting like Trump on Twitter, and he's really, frankly, upsetting a lot of people. There are a lot of, especially women, which is another demographic Elon should be playing towards, upset and who would never touch a Tesla vehicle. So I'm very frustrated with Elon, but long term, EVs will be dominant. ICE cars will go away. That is very clear. That long-term trajectory stays intact.
And Kevin, I want to ask you about delivery numbers, because one of the things that we're expecting potentially is for more price cuts because Tesla's feeling pressure to meet those delivery numbers. But I want to talk about the game changer that's supposed to be the Cybertruck. I want to play you this soundbite from the earnings call from Musk.
We dug our own grave with Cybertruck. It is going to require immense work to reach volume production and be cash flow positive at a price that people can afford. It will take, I don't know, a year to 18 months before it is a significant positive cash flow contributor.
So if they've dug their own grave with the Cybertruck, what are the expectations? Where does Tesla go from here in terms of the next leg up in terms of growth?
Really, I'm shocked that he would say something like this. The Cybertruck, and he mentioned it in another part of the earnings call as well, the Cybertruck could be the leading source of cash flow for Tesla in the future. But of course, when you ramp a new product, it's going to burn money at first. Of course, when you have a new innovative product that nobody's created before, that you have to create the systems for, the new parts for, whatever, of course it's going to be expensive at first. But a way to phrase this much better would be, look, we are the only pure play EV in North America that is actually profitable on the cars we sell. We're going to reinvest that profit into making what could be the greatest vehicle ever manufactured, the Cybertruck. And in 18 to 24 months, we think that is going to drive the greatest cash flow we've ever seen at Tesla, greater than anything we've ever seen before. That's the leadership we need, because what does that do? It motivates shareholders to support Tesla. Tesla doesn't have as much cash as people think. They're like, oh, they have $26 billion of cash. Yeah, well, they got a pile of $23.5 billion of bills on their desk. They just had to borrow $2 billion more just to stay afloat. They don't have as much cash as people think. So the cash flow matters. And we need that vision that what we're reinvesting for is actually going to be worth it in the future. Otherwise, if I'm a Tesla employee working on the Cybertruck, I listen to that earnings call, I'm like, screw this. Why would I work for this company? Why would I work and spend my efforts on this car if even our leaders like, oh, we're digging our own grave? It is a stupid thing to say. This was a disgusting earnings call. Elon should be banned from the earnings call. Quite frankly, he should just be an outside consultant, because all he's doing now is he's blocking people on Twitter who are criticizing him, and it's disgusting.
Tell us how you really feel, Kevin. Kevin Paffrath with a mouthful here on Tesla, financial analyst and YouTuber. Meet Kevin. Good to have you on. We'll have to dedicate an hour next time to get your Tesla thoughts. Thanks so much for that.
There's a lot from this Meet Kevin interview that I agree with. I think the CFO of Tesla leaving is very telling of what's going on behind the curtain at Tesla. When executives start to leave, it seems like a lot of people are done dealing with Elon Musk. At first, Elon was a very big part of Tesla's success. And now it seems like he's holding it back, right? He's got so many different fishing rods in the lake, he doesn't know which fish to reel in. And it's really hard for Tesla investors to get behind Tesla when Elon Musk can't even focus on Tesla. How can you tell me or my friend or my dad to invest in Tesla when is Elon Musk really that invested in Tesla anymore? I agree with me, Kevin. Maybe a consultancy is better at this point and let other people take the reins. If you want to be on X and if you want to do SpaceX and you want to launch rockets into Easter Bumblefuck, go do that. Let some other people take Tesla into the future. Elon Musk is a visionary. There's no debating that. But I think he's a hindrance moving forward for the company. There's one thing in this interview I don't necessarily agree with, and that's when Meet Kevin is talking about the success and potential success of Cybertruck. For whatever reason, I just don't see it. I don't see the other Tesla models selling less than Cybertruck. I just don't see a world where we're just seeing Cybertrucks everywhere. They're big, they're bulky. I don't see them working with ranch hands. I just don't see it. I don't see that vision like some other people do. Maybe I'll be wrong about this, but I think the Model S and Model Y will continue to sell way more than the potential of Cybertruck. I think Cybertruck might be the biggest flop in EV branding history. I think it'll be like the Hummer, where there'll be a few years where you'll start seeing them everywhere, everyone's having them, and then they don't sell at all. Maybe I'm wrong. Let me know in the comments below. What do you think about Cybertruck? Do you think we're going to be a world of Cybertrucks? I don't know. I don't really buy it. But me, Kevin, had a lot of points about Elon Musk that, his ability to kind of get people behind him is failing. Women don't want to be a part of him. A lot of moderates are like, I don't want to deal with this guy bitching and complaining and being the next Donald Trump on Twitter. Like, I tend to agree with that. Like, I want him to focus on Tesla. I don't give a shit about your opinion on politics or what you don't like and do like about society and you complaining about where interest rates are at. They are what they are, man. You got to move forward. So let me know in the comments below. Do you think Tesla has peaked? I don't necessarily think that's true, but there are some headwinds for sure, and Elon Musk might be the biggest headwind for Tesla, right? He's just too scatterbrained. He's all over the place. He needs to refocus his energy on Tesla, and if he wants Cybertruck to be the biggest vehicle in the history of America and the world, he's got to focus on that. You can't be complaining about interest rates. I like Tesla under $200 a share for sure. We're approaching that point. So I'm going to start scaling into Tesla slowly. This isn't financial advice, but I do think Tesla is a buy moving forward under $200 a share. Let me know in the comments below of your thoughts about Tesla. Don't forget to like and subscribe. Thanks for tuning in, guys, and we'll catch you on the next video. Peace.